The tariffs will hurt both countries, but China has long been preparing for less exposure to the U.S., diversifying in all ways, not just in terms of trading partners, investment, but also currencies and payment system. Of course, these are marginal improvements, but you see the dollar slowly declining. And we should not underestimate the degree and the pace of fragmentation that is happening, multipolarity, and the rise of economic blocs. We are not so quietly building up this huge financial infrastructure that's enabled by technology, blockchain technologies, the channels of alternative payment systems, digital central bank currency. That's actually happening at a much faster pace than we realize in that part of the world. China has signed with 40 countries bilateral swap agreements to settle in the local currencies. Of course, these are marginal improvements, but you see the dollar slowly declining. And the fundamental question, even apart from financial sanctions, is that there's a dollar shortage. Emerging markets, the size of GDP is growing massively. The demand for dollars is there. There's not enough liquidity. So now the interest rate is high, the dollar is at a very high level. This actually has a huge financial implication on the developing countries who are all looking to diversify.
You say that China is better prepared for a divorce with America than America. What do you mean by that?
Well, China has long been preparing for less exposure to the U.S., diversifying in all ways, not just in terms of trading partners, investment, but also currencies and payment system. And whichever president comes around, that plan hasn't changed. In fact, the first time around, the Trump tariff wars have set off this complete globalization frenzy among the Chinese companies. 80-something% of them have already implemented going abroad plans.
So they're trying to create foreign markets that are not American and things like that. But still, there's a huge amount that they do sell to America, and the tariffs would hurt, right?
The tariffs will hurt both countries, but you've seen already a gradual kind of redirection of trade to other countries. In fact, if you look at the EV solar panels and all these, what they call new productive forces, very little of it is actually going to the US. But it's totally pushed them to embrace new opportunities and sign new trade deals and new trading partners. And in fact, after the first time around Trump war, global trade has actually expanded. China's position in the world as a share of global exports has actually risen compared to before, while U.S. is declining. So I think China's response is, while U.S. is kind of going back, they're going to open up as much as possible. So this is why Premier Li has repeatedly said unilateral opening up, zero tariffs on the least developing countries. We should not underestimate the degree and the pace of fragmentation that is happening, multipolarity, and the rise of economic blocs. We're already seeing the data, whether it's investment or trade, the non-aligned blocs with the aligned blocs and their interaction with each other. If you go around the world, you're asking the likes of Brazil or ASEAN countries, what are they saying? The same thing: diversify. Don't be at the mercy of the dollar or the US financial system.
What do you make of the efforts that President Putin has made, Xi Jinping has talked about, which is to get away from the hegemony of the dollar? That because the dollar is the international currency, almost 90% of transactions done in dollars, it means the US can levy sanctions, it can cut people out of the countries out of the system. And obviously China, Russia, even some other countries don't like that and want to escape it. So far, it's mostly been talk. Is it more than that now?
I think it's much more than that. Whether it's quietly or not so quietly building up this huge financial infrastructure that's enabled by technology, blockchain technologies, the channels of alternative payment systems, digital central bank currency, that's actually happening at a much faster pace than we realize in that part of the world. China has signed with 40 countries bilateral swap agreements to settle in the local currencies. Of course, these are marginal improvements, but you see the dollar slowly declining. And the fundamental question, even apart from financial sanctions, is that there's a dollar shortage. Emerging markets, the size of GDP is growing massively. The demand for dollars is there. There's not enough liquidity. So now the interest rate is high, the dollar is at a very high level. This actually has a huge financial implication on the developing countries who are all looking to diversify.
So do you think the Trump administration will be surprised at how resilient China is as it tries to put pressure on it?
I think they will I think, first of all, the resilience of China has been demonstrated to a certain extent. The economic challenges are primarily internally driven. Exports have actually performed quite remarkably. The other countries, not so much, not so resilient. China is not so opposed to a Trump presidency because they still see Trump as somebody who they can negotiate with, that there's room for negotiation, and that there is some space to take the temperature down and to manage and maintain the relations. They've emphasized repeatedly mutual respect. That's not a high price to pay for the gains.
Most people look at China these days and they see an economy that is in serious trouble. Growth rates have stalled. There are a lot of people who don't even believe the official numbers. Business confidence is low, consumer confidence is low, total debt is high. And then there's the whole problem of demographics, of too few workers. Do you think that picture is correct? Do you think what does it look like to somebody like you who lives and breathes it?
First of all, China's economic challenges are primarily internally driven. They're not due to tariff wars or Trump or US restrictions. They are domestic factors. And the real reason is that I think what people less appreciate outside is real estate has cut it so wide and deep because it's fundamentally a shadow fiscal system and a shadow financial system. So when the real estate came down, it really brought down these two key pillars. Local governments, they have no resources. And so the economic challenges are real. I think it's wrong to say it's peak China because in terms of cutting edge technology, innovation, China is doing so well. There are hundreds of millions of rural population undereducated, underemployed. They're not even really part of the productive labor force. All of these can boost consumption. But what China really needs to do is to change that model, which was so brilliant at scaling up supply, like EVs and solar panels, and redirect it to changing demand. And here's the crucial part. The whole political economy incentive was geared so that the local governments spend on nurturing companies and producing stuff rather than spending on the necessary social services.
So what you're saying is that the Chinese government, particularly at the local level, should stop subsidizing the production of goods like EVs and things like that, and instead subsidize consumption, demand. What you mean is essentially put money in people's pockets so that they can buy healthcare, they can buy retirement, things like that. What is stopping them?
So there's a big dilemma. And again, this dilemma is not appreciated outside of China, which is, it's not that Chinese government doesn't want to put out more stimulus, more efforts, putting the economy back front and center. They realize that now. The current economic challenges, they are well aware of the unemployment issues, the youth problems, and the debt. The question is, how do you actually stimulate growth to not reignite the whole debt problem? That's the key challenge. Where does it go? How is it going to trickle to the real economy? How is it actually going to the demand side? How are people going to spend? They haven't figured that out. How is it going to look like, that stimulus package? So I think it would be wrong to say they're just hesitant, they don't want to do the stimulus. It's more of how to implement. That's the core constraint.
Do you think tariff will even work against China? Who will suffer more, the average American, who will need to pay higher costs? What do you guys think? Do you think China is well prepared to decouple from the United States market? Please leave your comment below. We would love to hear from you.
Thank you for making it this far. If you like this video, you might want to share it with a like-minded friend. Thank you, and as always, stay blessed.